Well, welcome to our Park City Market Talk webinar for June 2022. I'm Ron Wilstein, a broker at Keller Williams Luxury Properties here in Park City, Utah.
And I'm Jeremy Wilstein. I'm with this guy.
And you're with me the first time since pre-pandemic that we're side by side in our webinars. So it's good to be this close to you. All right, what are our topics today? We want to talk, of course, about real estate sales and prices, and
we're going to talk about where the market is going, which is a very interesting topic as we have all these different things happening in the world.
There is. Well, let's take a look at the Park City real estate market, beginning with the number of sales. Over the last 12 months, there's been 2,698 sales. This is homes, condominiums, and vacant land combined. This is all real estate brokerages combined, and that's 11% decrease, or 345 fewer sales than the 12 months before that.
All right, and this graph shows the year-to-year comparison of the closed sales from June 2021 through May 2022, and it's broken down between homes, condos, and lots. Again, this is all brokerages combined, all sales. In homes, we're down 37% from 1,023 to 646 sales this year. And in condominiums, we're down just 7% from 1,452 sales to 1,349. And land, we're down 34% from 867 sales to 574 sales. And I just want to note that our decrease in sales is attributed to our lack of inventory we've seen over the last year because there has been so many sales.
That's right. You can't sell what isn't available to be purchased. When we turn over to breaking it down by homes, and now we've broken it into Park City, Snyderville Basin, and the Jordanelle, you can see in all three categories a decrease, dropping in number of homes from 353 to 164, basically dropping in half. Condominiums declined 27% from 548 to 401. And lots, well, we don't have a lot of lots in its entirety, but it dropped 34% from 122 to 81. Again, not a lack of interest in buying, but a lack of product to buy.
Mm-hmm. And then finally, let's take a look at the number of condominium sales. And this is broken down again by geographical area with Park City, Snyderville Basin, and Jordanelle. And inside the city limits, we're seeing a 22% decrease in number of sales of condominiums from 556 to 433. Out in Snyderville Basin, we're actually up 2% from 618 sales to 629 sales. So we had more new product come on the market in Snyderville Basin. And also in Jordanelle, we're up 3% from 278 sales to 287 sales. Again, this is new inventory, new properties, new construction.
And now we're looking at land in the city limits. There were 61 sales previous year, down about half, down to 30 in Park City. Again, very limited inventory. Then in the Snyderville Basin, a drop more significant, 45%, from 337 to 185 sales, with a 23% decline in transaction from 469 in the Jordanelle area to 359. And when you combine all these charts together, you see that overall there's fewer sales, and again, the number one reason is due to a lack of properties to purchase. So let's take a look at prices. Jeremy?
All right, so this is very interesting. We had a lack of inventory. We have our sales numbers have dropped. However, prices in almost every category have gone through the roof. If we look at the comparison of our home median sold price during the same time period we've been discussing inside the Park City limits, look at that. We're up 33% from the median price of a home, 2.777500, up to 3.7 million will get you a house here. In Snyderville Basin, we're up 32% from about 1.6 million up to $2.15 million for a home. And then in Jordanelle, we're up 7% from 2.4 million up to 2.6 million. So increases in prices in every category, and we're seeing it stronger in Park City and Snyderville because we have even more lack of inventory.
Yep. And note this 7% increase in the Jordanville area. Everything else we show you will be in double digits or more in terms of appreciation year over year. Here we're turning to condominiums, and we see a 15% increase of those in the Park City area, climbing from a previous $1,170,000 median price to $1,345,000. We see a whopping 60% increase in the Snyderville Basin to $595,000 to just under $1 million at $950,000, and the Jordanville climbed from $704,500 to $907,300, 29% increase there.
Yeah, and that Snyderville Basin increase of 60%, the Pendry, which is a Montage property, was completed up at the base of Canyons Village, and all those properties did sell. So those recorded. So that's probably a bit of the 60% increase, but huge nonetheless.
Yeah, that's a good point, Jeremy, that it isn't they're not all the same properties for the last 2 years. If a more expensive property recently sold in the last year, which is Jeremy's point, then naturally that figure is going to be higher.
And then taking a look at vacant land, in Park City up 72%. Okay, from $1.2 million to just over $2 million. There were some very expensive sales happening in Upper Deer Valley, Red Cloud area of land over the last year. Snyderville Basin, still seeing a 52% increase from $650,000 to just shy of $1 million for a piece of land. And then finally at the Jordanville, look at that, 100% from $375,000 to $750,000 per piece of land. So you can see this correlation as inventory has dropped and the availability of homes. We're seeing many people go and buying land, and therefore the land market has really gone crazy, and people are going to be building their dream home on that property in the future.
And we continue to see buyers on the sidelines who either weren't able to be the selected buyer in negotiations on a property they wanted to acquire, or they just haven't seen the right one that they want to step up and buy. But again, no shortage of buyers out there. It's just shortage of inventory. So prices continue to rise. They rose by double digits in each case. The exceptions were only the 7% appreciation in the Jordanville home area, and of course the 100% in the land area in the Jordanville. So that's our math, that's our statistics, that's what's happening at Park City and Deer Valley for real estate. Well, let's take a look at where the Park City real estate market is heading and why. And it would be no surprise that there's so many things happening in the world right now that's affecting everybody, whether it's interest rates, inflation, the fear of recession, the stock market, oh my gosh, not to mention the war in Ukraine. These things are all having an impact on all of our lives and how we feel about the world and the life. And of course, Park City is going to be impacted in that. Also, we already shared with you about the number of properties for sale. We have a lack of inventory, and so in negotiation, it gets worked out between buyers and sellers. What is the right value and the right price for a property? Well, with that in mind, what we want to talk to you about is the changes as Jeremy and I see them. So if you're not here and you don't have a firsthand impression of what's going on, you can at least get a sense of people who live here and been here a long time who are watching real estate every single day. Okay, let's talk about how the Park City market has recently changed. Jeremy, I'll give it over to you.
Yeah, no, we've seen some very interesting things happen over the last month, and seen some changes here in the market. Most notably is we're seeing a lot more inventory come onto the market. So in the past, we might see 20 new properties come on the market and 40 properties go pending in one day, and now we're seeing 40 properties come to market and maybe 15 or 20 go pending. So really seen a shift, and I think it makes sense as some of these sellers that have been waiting and holding off putting their home on the market as the market continues to climb. they have since decided that this seems to be the time to put their home on the market, and we're getting more inventory, which is nice to see. It's giving buyers more options, and we're just gonna see how this summer shakes out. It'll be very interesting to see how the market responds to the more inventory.
Do you think with the all the things happening, whether it's interest rate or inflation or the war or what have you, and certainly the stock market, that sellers who were watching basically each sale set a new record high, and therefore they didn't want to put their property on the market too soon, shooting for the top, that maybe some are feeling this might be the top, and therefore that's why we're starting to pick up more inventory?
Yeah, I think there's all those events that are happening: the inflation, the stock market, the war. We've been in an up cycle for a very long time, and then notably when the Fed started raising these interest rates, we saw a pretty sudden change. Even though more than 50% of the deals here in Park City are cash, the national news does affect us here, and we're seeing a slowdown in the number of sales. Um, when I'm talking with sellers now and they're looking to sell their property, I recommend they go in where the last sale was and not try to push really higher than than the previous one. And I do that for a couple of reasons, is just so when we come to market, you've got an opportunity right when your property hits the market to be as attractive as possible to any potential buyers. And pricing just over the last month has become a lot more important in the sense of getting somebody interested in your property. In the past, we could, oh, I don't know, let's just throw out a price and just go 10% above, and we'd have buyers lining up to buy that. That has changed drastically. So if you're a seller looking to sell your property, we want to just really match where the market's at, and you can't really push it.
This is reminding me of the mortgage crisis that was kind of a painful experience for everyone, not just in Utah, but in the entire country. The mortgage crisis, as you recall, was caused by subprime loans failing. Park City had no subprime loans. Over 50% of our transactions are all cash. So it wasn't anything that was specific to Park City. In fact, Park City and resorts like Park City really didn't have the problem that the rest of the country was concerned with. But what I saw is many of the buyers or the sellers, people who own already, were living in those major cities across the country who were affected by the subprime. And basically the news brought them to a point that when they would call and ask about Park City, how's the Park City market, we would say, well, it's good. And they would say, how's that possible? Because ours is so bad. And I would often share with them that Park City has always done that, because when other markets are having difficulty and people like to typically invest closer to home, then they look further away to places like Park City and invest there. So we had kind of a reverse market condition. For the first time, it fell in alignment because the whole country decided, whether they had a subprime loan or not, that they were affected by it, led to short sales, et cetera, et cetera. So it reminds me of this because Park City is sitting here with limited supply, buyers on the sidelines, record-breaking sales, new prices, but the rest of the world is starting to experience the inflation, the interest rates, the war, all these uncertainties, and people are going to start, it's just a matter of time, projecting it into Park City's market and other markets like Park City, and do it enough, it becomes a self-fulfilled prophecy. So I think that's why some of these property owners are thinking, yeah, maybe this is the time to sell and not be as firm on my price, trying to expect a new record. They've already had huge appreciation, as we've already reported. But I think that's the biggest change. Having said that, everything we said earlier still applies. We have buyers on the sidelines waiting for properties to come on the market and willing to pay top dollar. And we have people who have a lot of money, frankly, as we've reported before. So they're not impacted as much as others by these economic issues, inflation and interest rates, et cetera.
Yeah, so when it comes down to negotiating in the market, there has been a pretty big shift over the last month. More so if you're a buyer, you may not have as much competition. However, that being said, if a property is, as Ron said, as if a property is well priced and it's a good property, we're still seeing multiple offers on it. Okay, so that hasn't, the buyers haven't stopped buying, but we're not getting as many multiple offers.
Yeah.
And so it's got a nice reprieve for buyers to have the ability to see a property come on the market and maybe it doesn't sell that first hour to multiple people. And so as a buyer, you're seeing a lot more options. Now, as a buyer, if you're financing, the interest rates are going up. So it's an interesting time. And I think as we go through the next couple months and next couple webinars, we'll really see how this starts to shake out.
Yeah. You know, we watch the statistics every time we do a webinar and report on it. We'll be doing the same thing on watching these trends and sharing with you what we see. And that's the best we can do is give you that information. And then you as a buyer or a seller, you know, make whatever decision you feel is the right one for you. Well, if you have any questions, don't hesitate to reach out to us either by email. Our email is on the screen, or give Jeremy or myself a phone call, and we're happy to discuss the market, any particular questions that come to mind that we didn't address in today's presentation.
Yeah, we expect to hear from a lot of you because this big shift in the market is really, there's a lot of questions. There's a lot of different things that are coming up. So feel free to reach out to us with your questions and we'll discuss it with you.
Don't forget to bookmark BuyParkCity.com, and we're here to help you in any way that you can with your investment and real estate needs and wants and questions.
Thanks for joining us.